Back with Justin Brown this morning from Element 25 on JustStocks. Justin, good to catch up with you.
Nice to see you, Andrew.
Look, tell us firstly a bit about Element 25 and the Butcherbird Manganese project.
Yeah, no problem. So early in the year, we published the feasibility study for the expansion of the mine site at Butcherbird. As your viewers would know, we've been working towards this point for some time with our stage 1 processing plant commissioned a couple of years ago. Now we're moving into what we call stage 2, which is going to take the production profile up to just over 1 million tonnes per year of concentrate, which will bring unit costs down and improve the economics of the business. Feasibility study showed that for an investment of around 50 million in capex, we can achieve some quite robust cash flows over a long period of time, given the long life of the Butcherbird asset.
And would you expect that capex to be funded from debt or equity?
Yeah, so we've had made some good progress in discussions with the North Australian Infrastructure Facility. We announced that we've passed their strategic assessment phase and we're now moving into due diligence. Whilst that's not a guarantee of funding, obviously it's an encouraging milestone to hit. Alongside NAIF, we're also looking at private sector funding options as well around debt, obviously the usual equity suspects, and then some creative financing around royalty and offtake prepay as well. And we hopefully bring that all together in the next couple of months.
And just with that expansion study, where would that put Element 25 on the global manganese cost curve?
Yeah, so it's going to drop us significantly from the positioning of stage 1 to just above the bottom quartile. So we will compete quite nicely with other producers in the space and obviously be more resilient in terms of being able to be profitable at all parts of the price cycle. So that's a really encouraging development for us as well.
What's the current mine life of the project?
Yeah, so that's an interesting point. So we currently sit on a reserve at the expanded production rate of about 7 years. One of the things we'll do in coming months is to drill out a large portion of the inferred resources into measured indicator, which will obviously increase that reserve substantially. The nice thing about Butcherbird is the overall global resource is around 260 million tonnes. So there's no shortage of ore. We just have to do a little more work to bring that into the reserve category so that we can report against it in that space.
And what are your plans as far as downstream opportunities?
Yeah, as your viewers would also know, we've been long working on a downstream processing option for the Butcherbird manganese ore. We developed some technologies starting in around 2017, which allows us to produce a very high purity manganese sulphate product, which is a key critical raw material for battery manufacturing. So what we've done is last year we published a feasibility study on what that would look like if we build our initial refinery in Louisiana, and that's where a lot of the effort's going right now. So we are partnering with General Motors and Stellantis to bring that project to reality and deliver high quality Australian manganese in a very high purity chemical form to the US battery industry.
And those funding agreements, GM and Stellantis, at what point would those kick in?
Yeah, so Stellantis and GM have committed a combined 115 million of funding. That's US dollars. So 15 million of that came in via an equity position that Stellantis took up last year. So they now sit with approximately 11% shareholding in the company at the corporate level. And then the second 15 combined with a senior secured debt facility from General Motors will kick another 100 million US into the overall project financing. And alongside that, we're pursuing a number of funding options, both in the private sector, but also under some quite sort of helpful projects around the LPO, the Loan Projects Office of the DOE. They have both a loan program and they've also got a separate office called the MESC office, which provides grant funding for projects of this type. So we're quite optimistic about potentially securing funding from that avenue alongside the GM and Stellantis commitments.
There's been a bit of weakness in the manganese sector. Are you expecting that to improve?
Yeah, so that's been a really interesting journey as well. So in the second half of last calendar year, we saw some declines in manganese prices in response to a slight economic slowdown in China in particular. But interestingly, that is showing signs of recovery in two ways. One is that China has shown some signs that their economy is starting to rebound. But secondly, there's been some supply disruptions as well, both through normal responses to pricing, but also there's a outage at Groote Eylandt, which is one of South32's large manganese producing centres, due to some storm damage that they suffered through a recent cyclone. So that has obviously cramped supply a little further, and we're seeing some pretty significant responses in price at the moment as well. So hopefully that can continue.
I suppose, Justin, just finally, with an enterprise value sitting around $30 million, how does Element 25 fare amongst your peers?
Yeah, look, I would argue we're very well placed. I think we're the most advanced in terms of being a significant scale producer in manganese concentrate, but also we're the most advanced in terms of developing downstream processing capability to produce high purity manganese sulphate. So I would argue, as I'm always going to do, Andrew, that we're undervalued, and hopefully your viewers can see the same.
Good to see you, Justin. Thanks for your time.
Thanks, Andrew. Much appreciated.